Hi, in this video we'll show you how to run the after-tax cash flow calculator report. So after logging into PropertyDirector, click the Reports menu item in the top navigation. And under the My Portfolio Reports area, click After-Tax Cash Flow Calculator. Once you get to this initial screen, you'll notice all of the properties in your portfolio are listed. All you need to do is tick the properties that you want to calculate the after-tax cash flow for. So we'll tick the properties here, 5 of the properties. Once you're done, click the Next button. When you arrive at the second screen, you'll see a number of input prompts for you to put in. Firstly, put in your taxable income. So in this case, let's assume it's $190,000 a year. Select your tax income bracket. So $190,000, that would be the 45% bracket. Now go down and you'll list that, and you'll notice that the system lists out each of the 5 properties that you just selected on the previous screen. And for each of the properties, the system automatically lists out 2 default deduction items, which are typical for most properties, which are capital works and fixtures and fittings. By default, the system selects the deduction method as the straight line method. It also has other options, the diminishing value method. For this example, we'll just use the standard straight line method. They're both typical accounting practices. And there's also a specify amount per year option, where you can input the specific values for the next 10 years. Usually this can be useful for examples where you buy a new off-the-plan development and the developer often gives you these values, so you can plug those in if you wish. But for our example, we'll use the straight line method. The system automatically defaults the total life value of the capital works to half of the original building purchase price. This can be overridden if the user wishes. Purchase years automatically populated depending on when the user actually purchased the property. The annual depreciation is defaulted to 2.5%, and the number of years is defaulted to 40 years. All of this information can be overridden by the user as they like. For deduction item 2, it uses the same approach, the straight line method, and all of the other same information, except the total life value of fixtures and fittings is defaulted to 10% of the purchase price for fixtures and fittings. So if you go down, all of the same defaults are applied, and again, the user can adjust these as they wish, and even change the deduction method to different methods for each property, so it can be customized as you like. But we'll just keep the defaults in there at the moment for this example. If you scroll all the way to the bottom, click the Calculate After-Tax Cash Flow button. The system applies all of those accounting calculations, and now it shows you each of the 5 properties listed and the after-tax cash flow for the next 10 years. So the key values here that are presented on the page are the rental income, which comes directly from the user's portfolio, loan repayments, which comes directly from the user's portfolio, expenses, again, which comes directly from the user's portfolio. The interest section extracts the interest component of the loan repayments. In the case of the 5 properties that were selected here, they're all interest-only loans, so the interest is the same as the loan repayments. But if there was a principal and interest loan, the system has rules to automatically figure out the interest component of the P&I loan. And if you go down, the system automatically figures out the depreciation for building, the depreciation of fixtures and fittings based on the data that was inputted. The system shows you the cash flow before tax and the estimated tax impact, which is a key figure. So it shows you based on the user's tax income bracket and the information inputted, including all of the deductions, that the user will get back $849.25 for this property for the current financial year, which means they end up with $5,562.03 in after-tax cash flow. The same method is repeated for each of the properties. So you'll notice here that different properties show different estimated tax impacts. If you go down, this property here in North Kellyville has got a tax return of $11,245, so that's quite a significant return there. And if you go to the bottom, there's a summary here that provides an aggregation of all of this information. That was all. Hopefully this video was helpful, and thank you.